Most people will never know this, but a single family quietly controls nearly half of the world's wealth, 45% of global assets, hidden behind layers of trusts, holding companies, and offshore accounts, are influenced by decisions made in rooms you will never enter. They are faceless to you, yet their fingerprints are on every market crash, every financial surge, every corporate merger. Here's what they don't want you to see. This is still happening today. The ordinary citizen believes in democracy, competition, free markets. Most people will never know this, but freedom in finance is largely an illusion. And the clock is ticking. Most people will never know this, because the media, the universities, the public discourse are all carefully curated. Newspapers show headlines of billionaires, celebrity entrepreneurs, or market indices rising and falling. Television celebrates success stories, IPOs, and startup valuations. Social media glamorizes wealth, but almost no one traces the origin. Here is what they don't want you to see. The real power lies not in what is public, but in what is hidden. This family's influence flows through hundreds of corporations, banks, and investment firms, often as silent shareholders. The average investor, the small business owner, and even government officials rarely grasp the magnitude. Most people will never know this, because the system was built to be invisible. And the more sophisticated the instruments, derivatives, ETFs, sovereign debt, the harder it is to follow the trail. The story begins in the late 19th century. In post-Civil War Europe, a handful of banking families consolidated power quietly but aggressively. They formed syndicates across borders, creating financial networks that seemed separate but were secretly intertwined. By the early 20th century, the family had stakes in major industries, coal, steel, railroads, while quietly financing wars, elections, and policy decisions. Most people will never know this, but many historical events have a financial subtext. World War I, for example, was as much a banking maneuver as a political conflict. Loans, bond sales, and credit flows ensured that the family could leverage national debt for private gain. Here's what they don't want you to see. Every crisis, every panic, has been an opportunity to consolidate power, to buy influence, to expand their reach. This is still happening today in more sophisticated forms, but with the same fundamental strategy. By the 1920s, the family had extended their influence into the United States. Using intermediaries, they quietly controlled significant portions of major banks. During the Great Depression, when the average citizen lost homes, jobs, and savings, the family acquired distressed assets at a fraction of value. Most people will never know this, but nearly every major bailout, every rescue of a financial institution, has a shadow architecture of private interests behind it. Gold reserves, corporate debt, and even public pensions became instruments to expand wealth rather than redistribute it. Here's what they don't want you to see. The Federal Reserve itself, though created under the guise of public protection, provided an avenue for indirect influence, allowing those with access to shape liquidity and credit flows at will. This is still happening today under regulatory frameworks most people assume exist to protect them. Through the mid-20th century, their holdings diversified further. Energy, mining, telecommunications industries critical to modern life fell under indirect control. Using complex trust structures, the family remained legally distant, yet financially dominant. Most people will never know this, but corporations often report public shareholders in filings, while the true controlling entities remain obscured through layers of trusts, holding companies, and cross-ownership. Here's what they don't want you to see. Mergers and acquisitions are often pre-approved and coordinated long before any public announcement. Insider influence extends not only to companies, but also to regulators, trade agreements, and tax policies. This is still happening today in even more globalized and automated systems. In the late 20th century, the family expanded into financial markets with precision. Hedge funds, derivatives, and sovereign wealth vehicles became tools to influence national economies without direct ownership. Most people will never know this, but the price of oil, gold, and major currencies often reflect coordinated moves orchestrated by a few key actors. Corporate bankruptcies, market panics, even interest rate shifts can serve strategic purposes. Here's what they don't want you to see. The 2008 financial crisis, for example, was a catastrophe for millions, but an opportunity for entities with foresight and capital. Assets sold cheaply during the collapse later returned unprecedented profits. This is still happening today, and the lessons learned then are being applied in increasingly sophisticated ways. By the 2000s, the family's influence was nearly global. Through stakes in asset management firms, banks, insurance companies, and multinational corporations, they could move markets, influence governments, and even shape central bank policy. Most people will never know this, but your retirement fund, your mortgage, and even your utility bills may be indirectly influenced by this single web of control. Here's what they don't want you to see. Transparency laws, financial disclosure rules, and corporate governance often serve as smoke. Layers of intermediaries ensure the public sees only a fraction of actual ownership. This is still happening today as networks become digital, faster, and more opaque. Now, connect the past to today. In 2025, global wealth reports show the richest 0.1% controlling a larger share than ever before. Through private equity, sovereign debt, and ESG-linked investments, the family can guide capital flows without public scrutiny. Most people will never know this, but their influence touches everything from government policy to climate initiatives. Here is what they done. T want you to see international coordination ensures that regulatory arbitrage benefits those already wealthy, while limiting options for ordinary citizens. In 2026, predictive analytics, AI-driven trading, and programmable assets magnify control exponentially. This is still happening today, and individuals often believe they are making independent choices, unaware of the larger forces shaping the system. The dark prediction for the next decade is stark. With AI, blockchain, and digital assets, wealth consolidation accelerates. Who wins? The few who already control the system, extending influence into emerging markets and technologies. Who loses? Most citizens, small business owners, and even governments dependent on financial systems controlled externally. Most people will never know this, but as traditional checks fail, economic freedom erodes silently. Here's what they don't want you to see. Centralized wealth leads to centralized power, shaping laws, markets, and even public opinion. This is still happening today, and the coming years will determine the real distribution of global influence. The warning is clear. Understand the structures, recognize the patterns, and trace the capital flows where possible. Most people will never know this, but awareness is the first defense. This is still happening today, and those who comprehend the web of influence gain perspective, if not full control. The family remains mostly invisible, yet their actions ripple through daily life, investments, loans, insurance, and markets. Each crisis, each policy, each technological rollout is part of a calculated strategy. If this video woke you up, drop a like and subscribe. New forbidden truth every single day. Turn on notifications. The next one might save your wealth. Come into one thing you're doing right now to prepare. I read every single one.